All right. Hey, everyone. Mark here. Welcome to another Greenbridge Investing Market Analysis. Hope everyone's doing well today. So in today's session, I'm going to be going over Bitcoin specifically. Obviously, the title here is the Bitcoin short fake out because it was setting up yesterday for a short, which I wrote about, and looks like it faked everyone out. Good thing we don't take shorts. Anyway, so we're going to focus on that here today. Of course, I'm going to be going over other markets as well, the stock market, Forex, metals. If you have a particular market or chart you'd like to see, you know how it goes. Just put it in the chat now. I see I have a couple in here. And once I complete my analysis, I'll go over charts that you want to see. All right? So again, thank you again for joining me for this live stream. So with that being said, this is for educational purposes only. For investment advice, please consult a licensed investment advisor. Now, before we get into Bitcoin, you know today is Monday, and we do have to go over this real quick. So the economic calendar. This is important, especially if you take Forex trades, because you want to be aware of what's going on during the week if there are any important scheduled economic events. Okay, so this is what the week looks like. I'll just go over it very quickly. So, today we have initial inflation hearings, parliamentary vote on Brexit. This can affect the pound, obviously. Actually, this should have been out. This should have come out by now. So I don't know what the deal is on that. The pound tried to bounce there a bit, but obviously not dramatically enough. Going into the evening here, China retail sales. I don't see anything that's really heavy here, okay? Unemployment rate for the pound, consumer price index, those aren't usually not big market movers. Bank of Canada consumer price index, not a big market mover. We are interested in the dollar Canadian pair though, as a long. Now, going into Wednesday, so the US has a bunch of numbers here, okay? So these can cause some movement, whether it's in the stock market or in Forex. Basically, when I'm talking about Forex, I'm talking about the US dollar. So we have retail sales, Fed monetary policy statement. That's the key piece of information right there. And the Fed interest rate decision. Hey, Michael. So this is coming out on Wednesday. This can potentially be a big market mover, or it could be a non-event. It's either FOMC meetings or it's the NFP number. That's pretty much what moves the market in a dramatic way. A lot of these other reports, unless it's a dramatic surprise, aren't really a big deal, okay, in terms of the strategy that we're employing. So watch out for this on Wednesday. It says here it's at 2 p.m., the rate decision, and then they have their press conference at 2:30. If Chairman Powell hints at any type of thing that the market doesn't want to hear, you can see a dramatic move. Again, there's no guarantee we will get a dramatic move. It could be a non-event, which you'll see just a lot of noise and a lot of nothing. So keep that in mind, all right? This is where knowing your levels and knowing what to anticipate around certain levels can be very helpful, no matter what market you are in, because this will affect everything if the dollar has a dramatic move. All right, so then after that, we have New Zealand. I wouldn't worry about too much of these. We don't have any trade in New Zealand right now. The recent one we had, I believe we're out of that. And so I wouldn't worry about these. Australia, unemployment rate, not going to worry about it. Bank of Japan, rate decision. Okay, this can move Forex markets somewhat, especially pairs that are against the yen. So when is that? That's 16, that's on Thursday in the evening, Eastern time. So just something to be aware of again. And then Friday, what do we have here? The vote cut, the Bank of England, interest rate decision. So there's a bunch of interest rate decisions the whole week. US on Wednesday, Japan on Thursday, and the UK on Friday. So that, especially since we're looking at some of these pairs, definitely want to have this information on your radar, because if there's any surprises in there that are not priced in, you could see a large move. And that helps us manage risk in the pairs that we're in, okay? If we happen to be in a trade, it helps to make decisions based on that, depending on what kind of price action we see. It just gives more context. All right, so real quick, I just want to say, if you're new to the Greenbridge Investing channel here, make sure you subscribe to the YouTube channel, so every time I do one of these, you get an email notification from YouTube. Plus, like the video if you like what I'm doing. That's always nice to see. And check out our website at greenbridgeinvesting.com. We do have a swing trade signal service by text and by email. We have a chat room and portfolio management ideas. Keep in mind, it's a swing trade signal service, not day trade. So, if we get 2 or 3 trades a week, that's probably a lot. All right, let's get into Bitcoin here. Again, if you have a question about a particular market you'd like to see, put it in the channel now. All right, so here's the situation. We've been watching this Bitcoin area. I'm gonna draw up a square around it here. This area right here, we've been watching this for some time after we had that bearish move off of 12K. All right, we're in a swing trade at that point. We got stopped out at 950, no problem. And this thing went as low as what? It went below 10,000. So that's why stops are good. They save money. Now, since then, it's been gyrating in this range, giving buy signals and giving sell signals. We've been steering clear of the buy signals because of this broad movement. This bearish momentum may still be in play. Now, with this type of candle that we have today, it's probably going to close like this. That's a change, okay? Because based on the structure before that, we were looking at this area as a possible lower high and a possible break to one of these support levels, which the market has not produced, okay? So that's an important piece of information. Yesterday, as you could see that bearish candle in there, it was an outside bar. It took out the previous candle low. And I wrote on TradingView, I said, if it needs to clear 200, I gave it some room, needs to clear 200 and you can have your sell signal. But I said, if you read the very first paragraph, I wrote, risk can be defined by that 500, the 10,500 area. Not only did it go back and retest the 10,500, blew right through it. So that if anyone had taken a short there, it should be stopped out, okay? Because this is not what a short should be doing. We don't short Bitcoin. But again, like I'm not going to ignore a sell signal. If I see it, I will mention it. Now, the fact that we have this strong bullish candle can lead to a new swing trade long. Now, of course, we're going to have to see how the next candle unfolds because this can also be a fake out. It's very possible that this thing produces a lower high somewhere in this region, just like the stock market. And this is the type of move we're looking at in the stock market, which I'm going to talk about here in a moment. But that's what you have to watch out for. For day trades, hey, it's fine. You jump in, you try to grab a couple 100 points if you can. And if it doesn't go your way, you get out, you take a small loss, and that's that. That's a day trade. That's not the type of trade I'm talking about here. So we're talking about a swing trade. So in order for us to go long, we're not interested in a couple 100 points because that's typically what our stop, our risk is often 500 points or more. So to make a couple 100 points is not worth it for our strategy. A lot of people don't understand that, but it's important. That's why it's so important to have the type of trade you're going to take defined in advance. So for our swing trade, we need to see some sort of setup. There is no setup here, and we need to be able to manage our risk or define our risk very clearly. And this low, that 10,250 low, may be a good place, that area somewhere may be a good place to put a stop. Okay, but again, we don't have any long setup here. We'll see how the next day goes. If this thing runs without us, hey, we're not going to chase it. Like I put in the chat room earlier today, I said, I'd rather make a mistake and miss a move than make a mistake and keep getting stopped out. Okay, missing moves doesn't cost any money. So another thing to keep in mind is if we miss a move, it starts to go, most likely it will pull back a little bit and give us some sort of buy signal to work with. It may not be the best location, but as you can see in previous movements here, look at this. On this leg up here, how many times did it produce a little red candle, which we could have done something with, okay, if we were not in that trade, if we had missed the original signal back here. Those are little mini continuation patterns. So that's why there's no need to fear missing out of anything, because there will always be some sort of continuation pattern that we can work with if the move is going to be a sustained broad move. But like I said, the possibility of a lower high, not a failed high, a lower high in this region is likely. So we have to be careful of that. If we do manage to get into a swing trade and we get a sell signal in that area, we're probably going to have to get out of that thing early in order to avoid getting caught in a lower high. All right, so that's Bitcoin. If you guys have any questions about it, please let me know. Now, another one that I like, I put this in the chat room too, Binance Coin. Um, Alice pointed out something because I don't follow news, I don't follow fundamentals, I don't follow logic. All right, I follow price action, and I embrace the randomness of all markets. Okay, because they're highly random. So logic won't help you. And my point is this. So Alice had mentioned that they're allowing you could use Binance Coin to fund you can use it to stake a farming to farm other coins or whatever. Okay, fine. That's a good reason for people to buy into it. My point is, if people are going to be pouring money into it and it can give us a level and a setup where we can take a chance, then hey, I'm all for it. I don't care. It's a swing trade, so I don't care where it is a year from now. I'm only interested in buying at a place where there's good reward risk, making a few points, and getting out. Okay, so this is on the radar. And look, it sort of faked out today. Anyone that bought that high, hopefully no one in our chat room bought that high. But I definitely want this on the long radar. Also, another one that I like that is kind of trying to do its own thing is NEO. Okay, NEO, as you know, is the I guess the Chinese equivalent of Ethereum, and this thing has been doing its own thing. While Bitcoin has been pulling back and faking out and this and that, this thing is still holding this area and it's attempting to break out. Okay, so this one's interesting. I like it, and it's a possible swing trade right there. So we'll keep this one in mind. Again, I'm not in a hurry to rush into things. If Bitcoin has a bearish fake out, it'll probably weigh on this, but I do like this chart relative to Bitcoin because it is right now doing its own thing for whatever reason. All right, so just another one to keep on the radar. All right, so that's it for the coins. Let me get into the stock market real quick. Thanks, Henry, for the symbol there. I'll get to it. Again, if you have a symbol that you'd like to see, a market or a stock or whatever it is, just please share it in the channel. So once I'm done with this, I'll get to it. Okay, so let me see how I'm doing with time. I don't want to spend a lot of time with my stuff here. I just want to spend enough time just to give you guys an idea. So if anyone read I put a report on TradingView. I've been pretty active on there about this fake out. Okay, when we closed going into Saturday, Sunday, whatever, the close that we got was not very bearish, and the level was very risky for shorts, and I talked about that. This level right here, bad place to be short. Okay, and a lot of people are probably short because of the initial bearish move, which makes sense. Okay, but the thing is, if they're opening new shorts or they're staying short expecting, oh, I'm going to catch the next leg, blah, 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 this is a tough spot, very tough spot. So that's why, probability favors a bounce. We're getting the bounce. I mean, look at today's candle trying to close on a stronger note. We have basically a double bottom, okay, off this level here, the 10-9 area, and it's basically like a failed low double bottom situation. That thing may rally going into the week here, especially if FOMC comes out that they say something that the market likes. I mean, it's setting up perfectly for that. Now, like I put out with Bitcoin, we're looking for this. Okay, this is very important. This is what we're looking for right here. We're looking for a retrace either into that area, okay, or maybe it goes up to this area and tests the high. That's possible. Now, this can unfold over a number of weeks, not in just a couple of days. Or we can go up here. Those are the inflection points. This one actually could be a little higher. But these are the inflection points that we are looking for new shorts. These are the areas where the probability is most favorable if we get a signal in these areas. If we don't get a signal, then it just clears them. Then it's just going to wipe out anyone who shorts it too early. All right, so these are the high probability areas, not any earlier than that. I mean, it's possible we can get slightly lower, but the signal has to be convincing. Okay, so Bitcoin can do the same thing. For some reason, it seems that Bitcoin has been more correlated to the stock market. I don't know why. I don't try to make sense of it. I don't try to figure it out. It just is what it is, and I follow it until it stops looking that way. Okay, that's the randomness of the market. So These are the locations. It's going to be the same for the S&P. So how does this help us for stocks? How does this help us? Well, the NASDAQ, the S&P, if they're going to bounce, many stocks are most likely in a position to bounce. And a lot of people are going to either get caught in shorts and they're going to get squeezed, or you're going to have new buyers jumping in figuring, oh, it's another higher low and the market's fine, it should make a higher high. So that is all possible, and it will open up some swing trade opportunities. All right, so I'm looking at a couple of stocks. The thing is, even if it looks compelling like that, we don't want to overload. We don't want to get too invested or have too many swing trades on, because then you get caught, right? You don't want to put on so much risk in this type of situation, especially when we're anticipating a lower high. So one stock that I like, which triggered today, but I'm not going to send this out, is this growth generation, which someone actually pointed out here in this analysis that I do. And look at this thing. Wow. Took out the previous candle high, and this thing is strong, right? It's closing here at $14.96, up $1.24. This is nice. Now, have we missed this? Well, not necessarily, because we still have this high to take out, okay, which is $15.21. So this is still a possibility, even though we don't have the best price. So I'm going to see how this thing closes. Most likely it's going to close strong. And this may be an opportunity for tomorrow, maybe even for an option outright. I don't usually like to buy calls, but maybe this will be a good call option, with a 2-month time, out of the money, see how cheap I can get it, something like that. Maybe we'll do something like that with it. I don't know. But I like the formation, okay? Double bottom situation. This is a broad high or low, and we're taking out that, we took out yesterday's high, and it looks like we're going to try to take out the day before's high, which is possible for tomorrow. So this is one to keep an eye on, especially if the stock market continues to push. Okay, so that's one I wanted to point out. Now, let me go over gold real quick, and then I'm gonna get into the stuff from you guys. And actually, I'll take a look at one Forex pair too. So gold, we had a trade in gold. What was that? 1445 or something like that, or 1450, and we exited that trade because of this situation right here, the pin bar. And look, we got faked out. This is a tough market when it keeps faking and faking and faking, right? 1 minute it looks bad, then it looks good, then it looks bad, then it looks good. So, in those situations, it's like it's best to let the market find clarity and not keep reversing your trade. If this is, obviously fundamentally gold wants to be strong. Gold has been strong. If gold continues higher, we'll just wait for another continuation pattern to get in and take a long, it may be at a worse price, but if that next breakout leg goes, there's got a lot of room there to go. And again, going into that FOMC meeting, it's a likely catalyst. All right, so something to keep in mind there. If you're in gold, if you're still in it, great. It's definitely not a short. If I was long gold, I would just be letting it ride at this point, all right? Because this could be the beginning of the move. Again, if you're not in gold, it's not easy to chase these, because you get in like, oh yeah, it's going to close strong. Next thing you know, you get another pin bar, and the thing is 20 points against you, and you're like, oh, this thing sucks. So you're better off waiting. Okay, so that's what we're going to do with gold. Now, so real quick, that was gold, and let me point out. Here's one that I've been watching, the euro pound. Okay, we don't talk about this one a whole lot. It's the euro against the pound, British pound, and obviously, these cross pairs, we don't follow many of these because a lot of times the spreads are just not worthwhile and all that kind of stuff. But I mean, look at this thing. So this may be something to keep an eye on if we can get that pullback into a more sensible area like there. Okay, which is basically the 91.5 area, something like that. So something to keep in mind. Remember, the euro has to appreciate faster than the pound, even if they're going in the same direction in order for this thing to go higher. So when I take a look at the pound, remember the pound has all that economic news coming out this week, right? They have their rate decision, they have their Brexit vote, all kinds of stuff, or they had their Brexit vote. And as you can see, there's a buy signal in the pound. Okay, so but this bearish momentum is it's a pain, and sometimes these signals, these lone signals like that, when when there's no structure behind them, it's just a signal, those are tough to take, right? I'd rather see some more confirmation and some more price stability before getting involved in something like that. So I just wanted to point that out. That's why we haven't called it, okay? So just a couple of things there. All right, so let's get into your stuff here, guys. So Kev, no problem. Kev can't make it. So let's take a look at XSPA. Let's see, what is this? Expressa Group, all right? Not familiar with them. So he's saying here, okay, failed low, lower low. All right, so let's first look at the inflection points. And what do we have here? We have one around here somewhere, which it took out, okay. We have one around here somewhere. And so price has been kind of struggling with that a bit. What I'm not a big fan of, I see the buy signal, like I see why he would find this interesting, but there's a couple of structural problems that I'm not too crazy about. You know, you're fighting this lower high, okay? It should not have made the lower low, for one, really should not have done that if it was going to maintain some kind of strength after such a previous bullish movement. So the fact that we took out this low here, and that this is a pretty significant takeout. It didn't take it out by a couple of candles and then reverse. It took it out and just kept going and going, okay? So when you have a situation like that, that sort of, what that tells me is that this move is no longer in play because we should not have taken out this low here. So the fact that we took it out puts this more in a potential range. This could be more of a consolidation range type of situation here because we haven't made a lower low relative to this low or the March low, but this is tough. So to get involved in something like this, I'd rather look for a better setup. Okay, there's many other stocks with better setups. You do have this little mini higher low, and this looks very similar to the one I was just pointing out, the growth generation, you know, where it's trying to take out that high. I mean, this is cheap stock. $2.07 is the high. What's this here? So basically $2.10, $2.15. Your risk is relatively low if you're going to use $1.95 as your stop, so maybe $1.85. So one attractive thing about this, even though the structure isn't the greatest, is the risk is pretty low, okay? You're risking about 50 cents reasonably, something like that, to make at least $1. I mean, what are you looking at here? $1, $1.50. So the reward risk isn't bad. Even if you make it to this area here, 332. So yeah, about $1.50. So it's not a bad idea in terms of reward risk. It's just there are better structures out there. All right. Have you seen that one that the trade of the week that we called HIB? Like, have you seen this one? And I bring this up because it's a similar situation where we had a nice little mini higher low, right? Nice higher low and breakout. I mean, that's the reason why we sent it out as trade of the week. And how high did this thing go? I mean, this thing went as high as what, 38.81, and it reached two of our targets. You know, not an easy trade to take since it gapped the next day after we called it. So I don't know who got into that one. But the point is, what's the difference between HIB and the one the XSPA? The difference is, look at this bullish trend. I mean, there's no question it's strong, super strong, right? And the market popped and this thing went, right? Because remember, the market was pulling back and this thing barely pulled back. That was the whole premise behind it. So that's why I'm bringing up HIB to compare it to XSPA. So anyway, that's what I think of it. You know, if you want to take a trade like that, that's up to you. But, you know, that's the reward risk is really the only thing attractive about it. But you have to be quick to get out of that thing if it's not working, because you're going against that bigger picture, okay, which can be a pain sometimes. All right, so there's that one. Let's see what else we got. MTN. All right, what is MTN? Let's see. Is this MTN? If you want me to look at another currency or something, just make sure you put like MTN USD, okay? Just so I get the symbol right and I don't spend 20 minutes on something that you don't want to see. So Vail Resorts. Now, I definitely like this structure. That's good. Let's look back a little bit and see what's going on here. And let's see what kind of inflection points we can find. So going back, I see this right here. That's an inflection point, and it looks like we've been having some problems with that recently. So you have that, All right, well, let's see what else we have here. We have this. So it's stuck in between this range. Now, the structure behind you is definitely bullish, right? Supportive. You do have higher lows and higher highs. Okay, cool. And so that's definitely all in your favor here. Today's close, bullish, not bad. I mean, you took out yesterday's high, okay. So this is, I mean, theoretically, this is a buy signal. And your risk can be measured from this range low, which is, what is this, around the 212. So I would give it a little more room and say around 212, something like that. That's the range low, or what is this here? Around, yeah, well, this low here is I'm sorry, this low here is 210. No, I'm sorry, it's lower. So I'd say around 208. Yeah, 208, around there. That's where you're measuring your risk from. This thing right now is at 219. So buying it right now, I mean, you're looking at, over 10 points of risk. The question is, what kind of reward can you get from something like this? Well, if it clears this higher low, theoretically it's a higher low, so in theory, it should make a higher high. That's what you'd be expecting, okay? Question is, how high is reasonable? So let's look at some historical prices. And, going back, there's obviously some resistance here, which is really your next inflection point. You're looking at 251. So, all right, it's got some potential there. Now, just because I have 251 doesn't mean this, there's some kind of guarantee that it's going to go to 251. It is likely to find resistance sooner than that. So that's why you have to use more conservative targets, or at least I would encourage using more conservative targets. But if you're risking 10 points or something like that, your first target, you should be making at least 10 points. So the question you have to ask is, where's that 10-point target? If you're buying this thing around 220, so 230, around there, I mean, that's within reason. As you can see, going back a little bit here, there was some support there, so that might give you a little bit of a hard time, okay? But that's where you have to be prepared to take something off the table if this thing starts going your way, when you're risking 10 points. Now you may say, well, what about the low of today's candle? Can you use that as your risk? Well, you can. Low of 214.42. That's a tighter stop. But if this thing fools around inside the range, which it's in right now, you're likely to get stopped out. You're much more likely to get stopped out. Okay, especially if it tries to go and doesn't break out or blah, 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 because you're in this little range. So another thing you can do is, if you don't want to buy this now, you could wait until it breaks out and try buying that breakout. Of course, you're going to have to use a stop relative to maybe this candle or whatever candle is that breakout candle, because the range low at that point will be too wide. Okay, there's no point in having a 20 or 30 point stop. It's just pointless. Okay, so there's just some ideas on that one. Again, you don't want to overload and take too many stocks. Now, the S&P and the NASDAQ are in position to at least try to go higher, which is good for stocks like this. Okay, now this thing has been following the stock market somewhat, I can see, off of the March low. It's been working somewhat. So I would expect that if the stock market goes, this thing should at least make an effort to follow. If not, it's not outperforming, but an effort is really all you can expect. Okay, it's reasonable. It's within reason. All right, so that's Vail. So I like it as a long. Definitely like it as a long, and that's how I would be evaluating my risk on something like that. Okay, thank you for bringing that one up, Henry. Mike wants to see VET. Okay, let's see, VET. Now, so this is an energy. Now, energy has been somewhat weak. I mean, with oil pulling back and stuff. So obviously, I could see why you'd like this as a potential long. But let's take a look at some structure here, because right off the bat, I don't like this. I don't like that. I don't like this. Okay. I also don't like this. All lower highs. All right. This structure here is hardly a recovery structure when it pretty much gave it back. So you're fighting weakness. That's for sure. That's one thing. So as far as a long, so the potential is going to be limited on something like this. If this thing was going to hold and try to recover, it should have done that here, but it broke it instead. So now you're dealing with this area here. And that is an inflection point. It is a support point. So I could see why you might have some interest in that. See, that's why I ask, put USD. Otherwise, I'll look up a stock and then I'll talk about something for 20 minutes. And you guys don't even want to see that. That's not a good looking stock right there. Okay, so VET against the dollar. All right, thanks. Yeah, VET chain. So again, if you guys want to see an altcoin, please just make sure you put USD after it so I know. And that's why I'm paying attention to the chat. Otherwise, I would have spoken about it for another hour. All right, so let's take a look at this. First thing I want to see are inflection points, right? We got one here. We got one here. We have one here. How much is this thing? Okay, so it's basically fooling around within a penny. Now, you do have in your favor this is nice bullish structure, right? That's one gigantic impulse pattern or impulse wave. So, okay, fine. That's good. That's what's in play. Since then, we have been dealing with this pullback, okay? And the question is, where do you buy this thing, right? Where do you buy this now? Well, it's made this attempt to go higher right here, right? You see that? It's made that attempt. But that can still turn into a lower high. Now, while Bitcoin and all of them, they're trying to turn, they're trying to break that bearish momentum. This one, I would not be in a hurry to buy into this one just yet. I'd want to see two things. Okay, either you get a double bottom, which is around that what is that? 12.3 area. It's hard for me to read these sub penny numbers, but that area right there, I would like to see a double bottom or something followed by a reversal pattern. Maybe it goes slightly lower to this inflection point, which is around 1 penny 05. All right, around there. Maybe you get the buy signal there. You either have those two scenarios, or there's a big rally, okay, and this thing starts to break this number right here, which is the 10138 area. You clear that, then it's taking out a lower high, which I would suspect then you would have a higher low in place. So that would be a change. That would basically signal a change, and this bearish momentum may no longer be in play at that point. So those are the scenarios I'd be waiting for. If it pushes above that one, this lower high, if it pushes above that, you could put your stop at the most recent higher low. So what are you looking at? Like a fraction of a penny? I don't even know the numbers here. But I think it's decent reward risk because you don't have to risk a lot. And if this thing starts to run again, even if you make it back up into this area here, which might be a potential inflection point on the way back, you're looking at, a penny 0184, something like that. So it may be worth the risk, in that type of situation. I wouldn't be overly optimistic and expect new highs, but if Bitcoin reverses and continues that momentum like it's trying to do right now, and this thing follows, then maybe you get that breakout. All right, but if you get long this thing, just keep something in mind. If you get long this thing and it starts messing with these numbers here, and you haven't taken any profit yet, you should definitely take something off the table or reduce risk at such an area, because the whole world is going to be doing the same thing, or at least the smart money is. And, even if you lock in a small portion of it, maybe 10 or 15% of it or something, that's a good habit to get into. And then you let the rest of it run to see if it breaks out. And the more it wastes time, the more it fluctuates and all that, then you just pull out a little more, put out a little more, reduce risk. Because a breakout should go. A breakout should not do this. This is not a breakout, okay? When something breaks out, this is a breakout. See how it just goes? Every candle is green, it closes strong, right? And then it doesn't really waste much time. Next, it has a little inside bar here, followed by another candle that makes progress. When something fails to break out, okay, you get this nonsense here, right? And it starts giving you red candles and starts taking out the low. That's not a breakout. So just something to keep in mind. All right, so that's VET coin or whatever this thing's called. All right, thanks for bringing that one up. VET chain. Okay, Ramana, can you look up? Sure, ADA. All right, So let's take a look. ADA, USD, Cardano. Let me see. Doesn't, hold on. I know, well, I guess maybe against USDT I'll get a better chart. Yeah, there we go. All right, so I'm going to use this chart because we have more history on it. So very similar situation as VettChain. All right, first let's take a look at the inflection points. You got one there. You got one here. Okay, no problem. You got one here. Right, so those are the points right off the bat. Those are your most relevant inflection points. Again, you have this nice broad bullish structure, which is what's in play. But you're fighting right now this corrective structure, right? That's what's the more recent, that's what we're up against. Okay. Well, so I mean, this is on Bittrex. It's going to be exact. It should be very similar to Binance. Even if I'm using it against USDT, it should be very close. I mean, look, I'll pull up I'll pull up against the USD. Let me see here. So if I go to Binance, here's Binance. Wait, Binance. Oh, they have it against Tether. Oh wait, do they have it against the US dollar? I don't see it against the US dollar. I see it. Oh, here it is. Oh no, USD coin. They don't have it against, here, Bitfinex has it against the dollar. But that's the Bitfinex chart, right? That's very limited. What is that? So I'd rather just work off this. The numbers should be very close. Okay, and the chart structure is going to be exactly the same. So again, what you're fighting against here is the possible lower high. Okay, this possible lower high situation. You know, just kind of like what Bitcoin is doing. Now, Bitcoin attempted to break that lower high. And it pulled in a lot of shorts who are now caught. But on something like this, just like VettChain, what I'd look for, I mean, the ideal situation, I don't know if it's going to deliver, but I would like to see an attempt at a double bottom. I would like to see this, right, an attempt to test that price again, which is what, 0861. So basically a little over 8.5 cents. Something like that, right? I would like to see it test there and give the double bottom. Now, if it does not do that, you know, either a double bottom or maybe slightly lower, get the failed low, that would be ideal. But if it doesn't deliver that, and instead it breaks higher, okay, meaning it breaks this area here, you will now have, at that point, you will have a higher low in place, okay, a little mini higher low in place, and a potential breakout there. So that could be the beginning of a broader leg. Of course, you're going to need Bitcoin, and you're going to need a lot of support from other coins to keep this thing going. And that's what you have to be careful of with these, are those fake outs. So if you get that scenario where it breaks out instead, and you want to buy that breakout, you know, again, are you taking huge risk? Well, you really shouldn't be. If you buy that breakout, you know, your stop is going to have to be based on this area here, okay, which would be this low, which at that point would be a higher low. 93.58. So you're going to have to put it like maybe 93 even, 0.93 even or something like that, and hope that it runs and hope that it goes. You're also going to have to hope that Bitcoin goes too. Because if Bitcoin turns again, you're probably going to see everyone dump this again. So just something to keep in mind there. You know, you can use that as a guide. And if this thing starts to run, you know, as far as profit targets, you got plenty of inflection points to work with here. I mean, you have this range up in here. You have this range, which is what? That's the 12.5 cent area, something like that. And even pushing up into here, which is like the 13.5 cent area. So if you get long something like that and start, those would be good points to at least reduce risk if you're in something like that. I would not be overly optimistic and expect, you know, brand new highs and all that kind of stuff unless Bitcoin has its run. And at that point, hopefully you've locked in some profit and you just let some of it run and see how far it goes. But that's how I'd look to do something like that. Okay. Again, there's a lot of these coins that are in similar situations, and why don't we call them all? Because we have to be mindful of our members. We don't want to get people into too many things, because if Bitcoin fakes everyone out again, then it's bad for everyone, right? So what we tell people is, if you see similar signals across these altcoins, or across similar stocks, or across similar forex pairs, pick one, pick two, and that's it, because it's all pretty much the same trade, right? If you take 10 different altcoins, pretty much it's the same trade for the most part, because they don't really outperform each other. They're not really on their own. All right. Some here and there if there's some news that happens to come out, but that's a lottery ticket. All right. So thanks for bringing that one up. By the way, real quick, if you guys are new to the Greenbridge Investing channel, anyone that's new here, please register for the channel. Also, press the like button. Let me know that you like what I'm doing here. It makes me feel good. And check out greenbridgeinvesting.com. We do have a swing trade signal service by text and by email. It's for swing trades. So you get maybe a couple of trades per week. We don't have like a constant stream of trades. We're very conservative. And we also have portfolio management ideas in a chat room where we share insight and updates and analysis each day. Plus, tomorrow is our podcast, by the way, at 4 p.m. Eastern time. And what we've been doing with our podcasts recently is the trade of the week. Okay, that's where HIB came from, HIBB. Before that, we had the dollar franc. So even just for that, it's worth checking out, because at least we find something that makes sense in terms of a trade. Okay, even if you just paper trade it. All right, so let's take a look at, we had another one here, Tilray, one of the cannabis stocks. So this one has been, so the cannabis sector has, we've been involved in this. It's been on our radar. It's been very difficult and uneventful. Before I get into Tilray, let me show you CGC, because CGC is pretty much the leader in this space. Okay, so I want to point out CGC first, because this is really like the sector leader that you should be watching for hints. CGC seems to be staying above this level here, this 15.25 area. That's a pretty key support for this thing, and it just maintains it for weeks and weeks and months, and it's trying to give us another buy signal today, right? You see that, which is nice to see for this out of place sector. If CGC takes out this high of 1693, right, then perhaps it'll test that $20 area again, and it needs to clear that. It's going to need some kind of news catalyst to get this thing going. So remember, that type of news, type of catalyst, this thing can come out of nowhere. This thing doesn't really follow the stock market very well. So I wouldn't be worried too much about it over like the FOMC meeting and stuff like that. But this thing needs its own type of news, whether someone took over someone else or some kind of government law, now they could sell pot on the street corners, whatever it is. All right, I'm just exaggerating, but it needs news. So back to Tilray, which obviously is it's one of the members of the cannabis stock sector. All right, so right off the bat, like I was pointing out with that vet stock that we were looking at, look at this, bearish, right? That's bearish structure, lower high, no good. These are no good for longs. We have another lower high over here. So those are all characteristic signs of weakness. So what do we have in favor of strength? Well, let's see, that was taken out, that support was taken out, that's not good. You have this right here. All right, so that's pretty much all you have. And so you have this not so great attempt at bullish structure. But as we could see, there's so many stocks that have such better structures than this. Now, as far as today's candle, I could see why you'd find some interest in this. I mean, I see a bullish pin bar. Now, with taking into consideration what CGC is doing, okay, if CGC can lead the way, you may get a pop. I mean, you have a pin bar today. That's good. But this thing just has a lot working against it. So what I would say for something like this, for one, how do you measure your risk? At least the bottom of this pin bar, which is $5, so maybe $4.85, something like that. Okay, if you get involved, this is risky. This one, because it's so out of play. Now, if you get into this thing and it starts to go, don't get overly optimistic. So you should be conservative with targets. For one, this thing needs to take out this area here, the 579 or basically $6 area, needs to take that out in order to prove that this bearish momentum is losing its control, number one. Number two, you should start reducing risk in areas like this, which is what, the high sixes, low sevens, and then you try to let some run. If you're getting strong closes, you try to let some run to see if it wants to, break and do something special. It can happen, and start pushing these levels. I just wouldn't be too optimistic about it now. So it's usually best, if you're going to take a position, to lock in profits early if you can get some relative to your risk. So what's today's high here? 531. So if you're buying this thing at 545 or something like that, you give it a little room, 550, and you're risking about 50 cents, you should be at least locking in $1. All right, something along those lines. Lock in some at $1. Try to lock some more in at $1.50. And then, if you have another third, try to let 30% of it run to see if there's a run. Because that's the way these stocks are. This thing was at 100 and something at one time. We go back. I remember this ridiculous stock. So there was a lot of hype in this stock. I mean, look at this thing. Look where this thing's coming from. So if this thing starts to become favorable again, you can see those type of moves, but it obviously can take some time. You're not going to see a recovery like that in 1 week or in a couple of days. It could take 6 months or longer for this thing to become back in everyone's favor and to see that type of price action. So those are some of the considerations that I would have with this thing. This one may be a good options play too. You know why? Because a DJ had pointed out, I missed that one on DJ, on GRWG. 17.5 call, January 2020, $2.45. That's not horrible, right? So, and I'm sorry I skipped over that, DJ. But in a situation like this, a call may be good because the calls on this thing, on Tilray, if they have options, I don't know if they do, they should, they're going to probably be worth next to nothing because this thing is so out of play, right? So if you buy an out of the money call around, I don't know, $8 or $9, and you're going to have to buy 3 months out or something, you're going to have to definitely buy yourself some time. It should be, you should be able to get it cheap. And if that's the case, now you have time. And if there's a pop, and the thing starts to go, you're in from a great price and you got it real cheap. You got a cheap call, which will appreciate quickly if it can go through that strike price. But you need time on these things because these things waste a lot of time. So that's one thing to consider. Or, you just buy the stock outright and manage it that way. You don't have to worry about time. All right, so a couple of considerations there. But these things have been so difficult and so out of play that they're pretty much a gamble, right? And they don't really have a lot of fundamentals behind them either. CGC is going to really have to start doing things to get the rest of the sector going. So just want to point those things out, all right? Highly speculative. All right, cool. So let's see what else we have here. Well, thanks, Mike. Thank you. I'm glad you find it helpful. So do I have any other questions? Right, so DJ was pointing out GRWG for the 17.5 call, $2.45, January. That's quite some time, right? You're looking at 4 months out, something like that for $2.45. That's not bad. That's not a bad premium for that much time, all right? That means you have all that time for that thing to start doing something. And if the stock market is able to at least test the high, you may be able to get out of that, for a decent profit, and you don't have to tie up a lot of money. And that's why, options can be very attractive, but you have to be very selective with them, especially long options. And if they're not working, it's best to get out of them right away because time is working against you, and your premium can just turn into nothing if you wait too long. And it just turns into a loss that, for no reason. All right. So do I have any other markets or stocks or anything you guys would like to see? Again, if you're new to Greenbridge, please make sure you register for the YouTube channel here. Make sure that you like my video if you like it. If you have any feedback for me, constructive, whatever it is, let me know because I always want to improve these and make these better. And check out GreenbridgeInvesting.com. We do have swing trade signals by text and by email. They are swing trades. Know what those are. We have portfolio management ideas and chat room where we share insight every day, insight and analysis and updates to our trades. All right, you guys, so do I have any other questions? Let me see how long I've been talking because I lose track sometimes. Okay, all right, it's a decent amount of time. Um, Remember, tomorrow's our podcast. All right, Talking Markets with Mark and Andrew. We always feature a trade of the week that we share with everyone. If you registered for Greenbridge Investing, even as a free member, you'll get that email. Okay, if you don't get the email, then it could be because it went into your spam folder or something. But we send that out to everyone. It's just to show what we can do. All right, Tilray. So DJ's my options guy over here. Let's see. Tilray, the $8 call, March, 46 cents for March 2021. That's what I'm talking about. That's cheap. 46 cents. I mean, that's pretty much the risk that you're taking by buying 100 shares of it now and giving it like a 50-cent stop. But instead, you could buy one call, okay, cost you $50 basically, or $46, and you have till March for this thing to go somewhere. You have till March for this thing to go above $8. I mean, you know, it's cheap because, for one, no one sees any opportunity in it. That's usually an opportune type of option. You have all that time, and it's only 46 cents. So if it doesn't work out, I mean, how much? If 2 months go by, the thing goes nowhere. The premium will probably be worth like 20 cents, and you can still get out and take a 50% loss, half your loss. But if with 100 shares, $46, so you lose $20. I mean, even if you don't get out and you let the thing go to zero, all right? I mean, it's not a huge risk in that sense. Your risk is limited to only 46 cents, and you have all that time. So that's good. Any little piece of news comes out and this thing trades to 10, it's going to be a home run. All right? If any little piece of news between now and March, what are the chances, right? That's what you have to look at. All right, so thanks for pointing that out, DJ. There was an October after that. Okay. So yeah, October, obviously, I wouldn't go for the October because you need more time than that. So the next one is obviously March when you're looking at these monthlies. Anyway, that's why options, when you pick them right, they can really work out, and you don't have to risk a lot of money. You don't have to tie up a lot of money. And having a long option doesn't tie up any margin either. All right, cars, sure. By the way, for those of you that haven't been to our website, we have a webinar library, and or even on this YouTube channel. I conducted an options webinar recently, and I talked about how we buy and sell options. It was really more for how to place the orders, but check it out. It's on YouTube. You can check it out. It's free. All right. So POW, bringing up cars. Let's see. Cars.com. All right. So let's see what the story is here. Right away, I'm looking for inflection points, and I like that one. We have one over here somewhere. Okay. We also have one over here. All right, so those are your inflection points. Let me see. We have one in this area right here too. Okay, so nice reversal situation today. Nice candle today. Chasing it though. A little bit of a chase, right? So I like the double bottom, but what are you risking if you buy this thing right now? All right, this thing closes in a few minutes. The high is $8.70. The low is $8.18. This low over here is around 7.5. So you're looking at $1.20 of risk, something like that, if you buy it right now. And that means you need to be making at least $1.20 on your first target, something like that. Is that reasonable? Well, let's see. These highs, 982. It's tough. This is a little tough, especially since this can develop into a head and shoulders. It's possible. You're going right into that 9.5 inflection point. So my point is this. I like the overall structure. Okay, you do have this nice higher low situation, like this broader structure. Let's just go back a bit. Now, a lot of stocks show this, obviously the March sell-off. But this at least, we looked at a few stocks that don't have great structure. But this at least, it had the lower high, but it took out the lower high. Okay, this is what a strong stock should do, or a stronger stock or strengthening stock should do. It should take out the lower high, not stay below it. So you have that in your favor. Okay, going back further than that, I mean, yeah, so the more recent structure is more supportive. What I would do on a stock like this, because I wouldn't want to chase it, is I would wait for some sort of noise or some sort of inside bar type of situation. So if this thing over the next few days can pull back into this area, something like that, somewhere like these little inside bars here around the 8.25 area, that might provide a better price and a much better reward risk, especially since your first target's going to have to be somewhere in those mid 9s. Okay, and then of course, if you could reach that target, then you try to let it run and see where it goes from there. All right, but overall structure, you have a higher low. It should lead to a higher high, especially if you have a supportive stock market to a point. And that's what we're expecting, especially going into the FOMC. That'll be interesting how that goes. Now, and that's why I want to bring up something like Workhorse, because look at Workhorse. This is a good example of a stock that, once it starts reaching its targets, you just let it run. The third target on this thing is 25.85, right? And look at this thing today, 26.15. This thing went to all three targets. Workhorse is something that we got in back in July, and it took a really long time. This trade actually was a limit order that eventually filled a couple of days after we put the trade out. And we had to sit in this thing for 2 months, right? And it reached its third target today, okay? Basically, what's the 25.80? No, I'm sorry, the day before. But still, point is, it took a long time. All right, so I'm bringing that up in relation to this because that's the kind of patience you have to have. But you try to let one run, or you try to let a little bit of it run to see if it could perform like that. And sometimes it takes time. But you should be reducing risk along the way, because if you get that head and shoulders, you'll be happy that you reduced risk and took something off the table. And if it turns around, hey, you know what? No big deal. Okay? That's what makes you a strong hand. Okay, cool. So there's that one. Pow, I've also been sitting on GRA. Starting to look strong. I'm liking, okay. So let's take a look at GRA real quick, and then I'm going to wrap this up, all right? But thanks for bringing that up, pal. Let's see, GRA. Okay. Grace. Okay. So all right, so this is one of those situations that looks similar to what I call Tilray, right? So you have that, you have the lower high, hasn't broken that high yet, hasn't broken it, but you know what? You do have this bullish structure, and although it's not the greatest overall pattern, it's trying to maintain it, okay? It's trying. So this could be a broader higher low, which is good. Okay, that's a good sign. And a nice strong close today. And you do have this little higher low in place, this little mini higher low, which is, what is this low here? 41.95. So that's all good. Okay, it would be nice to see this thing clear and then start pushing and build like another bullish leg. Especially, you'll get that confirmation once it starts taking out this level here, which is 47.84. So that's a little ways to go, and I wouldn't want to buy it at that price. You should be in it by that price. So this breakout here, if you can close decisively above that, that would be a good start. So yeah, you know what? I like it as a long. Definitely agree with it as a long. And you can measure your risk from this 42.25 area. Where did it close today? 43.82. So about $1.50 of risk, and you got plenty of potential in there to make more than $1.50. Okay, so I definitely like it as a long. Remember, everyone, there's going to be a number of long signals while the stock market is trying to turn around, like I pointed out earlier. There are going to be a number, right, pal. I see that inverted head and shoulders, and that's a good sign. That's what you want to see with the stock market attempting to push back to the high. And so there are going to be buy signals, and many of them, like this one's worth it's worth the risk, because there's plenty of potential there. We looked at a couple of other ones they're worth the risk. The thing is, you don't want to overload. If there's like 10 signals, you don't want to take all of them. Take a couple that you like, that maybe you're familiar with the stock, or maybe the price is better, so you can put on maybe a little bit of a larger position. But my point is, don't take them all, because then you're caught. You'll have this one large position overall. The market has, if the FOMC doesn't come out good on Wednesday or whatever, some news comes out and the market pulls back dramatically, now you're caught. And you don't want to get into that situation, okay? If we didn't have such a broad pullback and all that kind of stuff, on the stock market, or if we had more structure, more bullish structure developed here. Let me just pull up the Nasdaq here real quick. Then I'd say, okay, you could be a little more aggressive. But these are just not the levels to be aggressive. It's not a bad place to take some action. Just don't overload. That's all I'm saying. Just don't overload. All right. A place to really, you want to wait for a really good inflection point to be more aggressive. And right now, that is like this area here. Okay, the mid to low 10,000s. That's and you need structure there. That would at least justify if you want to be a little more aggressive and put on more, because it's like, well, how much lower is the market going to go? It's a good inflection point. But here you have a minor inflection point. So it may run to a point. That's when you want to reduce your risk. And if we get the lower highs, then then we want to be looking for shorts, or you should be reducing risk even more, or hedging or something to protect against that if this thing goes for the lower low. Because again, that inflection point, like I said, is still much lower. And going into the election coming up, there could be uncertainty that can come out of nowhere and knock the wind out of the market. And you have to be prepared for that. You're not going to see it on a chart. You're not going to see any kind of special signal on the chart. You just have to be prepared, and it's really all really an idea of probability. Okay, so I'm gonna leave you guys with that. I'm gonna wrap it up here. Been at it for an hour. I really appreciate all the participation, all your questions, all the symbols that you've been putting in the chat. I really like that, and I really hope that you find this insightful and helpful for your own decision-making process. All right, so I want to thank you again for watching. Again, make sure to check out greenbridgeinvesting.com. I'm not going to go through the whole thing again. Just you know what to do, and we have a swing trade signal by text and by email. So just make sure you check it out, and I will see you guys in the chat room. Thank you again. I'll talk to you. Thanks a lot.